A property tax payment plan is an agreement you can make with your local tax office. It allows you to pay your overdue property taxes in smaller, more manageable installments over a set period. Instead of a single large payment, you can break it down. In Harris County, including the city of Houston, these plans help residents unable to pay by the deadline, January 31st each year. These arrangements are a formal way to show the county you intend to pay, just on a different schedule. Counties and cities offer these payment plans for several important reasons. Primarily, their goal is to collect the tax revenue that is needed to fund essential public services: schools, roads, police, and fire departments. When homeowners fall behind, it creates a shortfall in that budget. By offering a payment plan, the county can ensure a steady flow of revenue, even if it is delayed. This approach is often more effective and less costly for the county than pursuing immediate and aggressive legal action against every single delinquent account, which can be a long and expensive process for everyone involved. These plans also serve a crucial public interest, helping people keep their homes. For many families, their home is their most significant asset and the cornerstone of their stability. Losing a home to tax foreclosure can be a devastating event with long-term consequences. By providing a pathway to catch up on payments, the Harris County Tax Office gives homeowners a vital lifeline. It provides the breathing room to sort out finances without the immediate threat of losing the property. This approach reflects an understanding that financial hardship can happen to anyone, and it offers a structured, supportive way forward. To start a payment plan, you typically need to contact the tax office directly. For Harris County residents, reach out to the Harris County Tax Assessor Collector's Office. You will often need to fill out a specific form. There are eligibility requirements, and you must make an initial down payment to begin the plan. Once the plan is active, you must make every single monthly payment on time. Missing a payment can void the agreement and restart more serious collection actions from the county. When a property tax bill becomes delinquent, the amount you owe begins to grow immediately. This is not just a simple late fee, it is a combination of accumulating interest, penalties, and additional collection fees. In Texas, the law sets out how these charges are added. On February 1st, if your taxes are unpaid, a penalty of 6% and interest of 1% are added to your base tax amount, an immediate 7% increase. Each month the tax remains unpaid, another 1% penalty and 1% interest accrue, creating a steady climb in the total amount you owe. This growth is continuous and can feel overwhelming. By July 1st, the total penalty reaches 12%, but 1% monthly interest continues without a cap. If still delinquent on July 1st, an additional penalty of up to 20% can be added to cover collection costs, often when a private law firm is hired. This is where the debt can truly snowball, turning a few $1,000s into a much larger burden. These added costs directly impact your home equity. Home equity is the market value of your home minus debts against it, like your mortgage and your tax debt. As tax debt grows each month due to interest and penalties, it eats away at the equity you built. If you sell, the tax debt and fees must be paid from the sale proceeds first, reducing your profit. Imagine your home is worth $300,000 and you have a $200,000 mortgage, giving you $100,000 in equity. If you fall behind on $5,000 in property taxes, that quickly grows. After a year, with penalties and interest, it might be $7,000 or more, now attached to your property. That $100,000 you thought you had is effectively reduced to $93,000. For homeowners with less equity or fixed incomes, this erosion can be crippling, making future loans or retirement planning harder. The most serious consequence of unpaid property taxes is foreclosure, the legal process to take and sell the property at auction to pay the debt. In Texas, the timeline is clearly defined. Knowing key dates gives you a window to act, paying in full, setting up a plan, or seeking professional help. Foreclosure does not happen overnight. After delinquency, collection attorneys can file a lawsuit. You will be served. Ignoring these papers is the worst thing you can do. If the county obtains a judgment, the court can order a tax sale, typically held on the first Tuesday of the month. Even after a sale, Texas law provides a right of redemption. For a homestead, 2 years to buy back the home by paying the auction price, all taxes and costs, plus a significant premium, 25% in year 1, 50% in year 2. Understanding this timeline early is your best defense. Act as soon as you anticipate trouble. Do not wait for penalties, interest, or a lawsuit. The earlier you contact the Harris County Tax Office, the more options you will have. A plan set up in February is far more manageable than a debt grown by 30 or 40%, and already with collection attorneys. Taking control begins with simple steps. Review your Harris County tax bill and the total amount due. Note the payment deadline, January 31st. If you cannot pay in full, call the tax office. Ask about eligibility, the initial down payment, and how interest is calculated. Keep records and track every payment. Seek help from nonprofit housing counselors or legal aid. In summary, payment plans help avoid delinquency, charges grow over time and reduce equity, and knowing the foreclosure timeline early is critical. Contact the tax office, ask questions, keep records, and seek help to protect your home.